Welcome back to the Steps to Soul podcast. Today, my co-host Christopher Sater and I, Brandon Bourgeois, are going to cover another great topic for you as part of our mini-series, If Your Goal is to Sell Your Business Fast and Correctly. A key component to that, understanding the value of an offer for your business and how you need to react. Now, this is a pretty wide-ranging topic, Chris. There's a lot of things you can throw in here. We can paint a lot of broad brushes today, what's going on. But in reality, there's two things. You've got something you think is tangible. Now, what do you do with it? And that is probably the hardest discussions besides valuation that owners are going to face when the journey to sell their company either starts or is brought to their attention unexpectedly.
Yeah, absolutely. You got it's one of the most important moments in the entire sale process is the first time an offer hits the table, right?
Yes.
Whether it comes in through email or a verbal something. What I've seen over and over is that owners don't lose deals because the offer was bad generally. They lose deals because of how they first reacted to it. What that tells the buyer, whether it's excitement or frustration, that tends to set the tone for everything that's going to follow. And if you misread what the offer actually represents, you can unintentionally slow down or completely derail what could have been a very workable deal, but your first reaction kind of set the.
You're exactly correct. So often we see owners have a vision of what a price might be, even though they've agreed to a valuation. And when it first comes in, they're just like, well, they didn't give me full price. Well, this is not selling a house. This is not residential real estate. And I think sometimes owners relate the most common experience of a big transaction, which is residential or commercial real estate transactions, to a business sale. And they are different. And how they're laid out and presented are also different. So yes, it can, that you're exactly right. That original and first response can also dictate to the buyer, what kind of person am I negotiating with? And honestly, do I want to even really go too much further or give any retrades or work on anything? You'd be surprised as a seller out there listening. Strategically, understand, analyze, and then execute. And we're going to work all the way through that. And a lot of this is also to buyers. This is great for you to take in right now. These are notes on how to present your offer and make sure it's fully understood, but also digested. That is so much of a part of this deal. Besides what's on the four walls of the page, how it's presented. And there are ways, I've read offers as you have too, Chris, where we could have four guys in a room. All four guys could read it differently, right? So how it's written, how it's presented is just as important as the four walls of the paper and what's in between them. So, it's, and often, let's make this point too, where owners misread the offer, typically. They look at the bottom line price, they look at the base contingencies, and they focus on those key points. So when you first get that offer, stop. Don't just look at the key points. Look at the value of the transaction. You and I stress that constantly. What is this going to look like? First off, identify what kind of sale it is. Figure out what your liabilities are going to be. Then you can digest the offer properly. But if you want just to go straight to the price, straight to the bottom line number, you're overlapping all the key components that get you to that number. And that's where the real value is in the LOI or the offer. I was on a podcast yesterday with George Welmer, Chris, and we talked about LOIs. And the first thing I said was how to make a good LOI. Put some meat and potatoes in the paper. Make it clear. Give good instruction. That will guide the transaction. The same goes for getting your offer, how to react. Read through the meat and potatoes. Understand it top to bottom. If you don't understand that, you'll never get to the final price or the agreed upon value as presented. So let me ask you this.
You're dead on with that information.
I know I am, buddy. Come on. I've been doing this for 14 years. I would say the biggest issue I see is emotional reaction. You mentioned it. I want to touch on that. It's way too low, or this is not the full price offer, or I can't believe they gave me this. My eyes, often that's a misinterpretation of how deal making is done. What do you typically see leads to those kind of reactions?
It's often about what the owner expected, and you're right. If the broker, hopefully there's a broker involved, if he didn't set expectations of what the value is versus what you're asking on the market and what the range of offer is probably going to be, yeah, that first offer is going to be shocking, especially if it's way off from your asking price or it's got a lot of seller financing. If you didn't understand all that was coming, then, this is your first rodeo, so to say, and you're going to be pretty shocked at what you get most of the times. There's been a few occasions where first offer that's come in has been really good, but it's not the norm. The norm is not to be lowballed, don't get me wrong, but they're not going to offer full price, all cash at closing, generally as a first offer. You may get one or two out of 20, 25 of those offers. Maybe you've seen those. It's not that rare. It's not one out of a million, but Yeah, that expectation of when the offer comes in. A lot of times owners aren't really reacting to the offer itself. They're
Hmm.
reacting to what they expected the offer to be. And if they had a number in their head, anything below that immediately feels like an insult or something's wrong.
Hmm.
But what they got to understand is buyers are not evaluating their expectations of what they thought they were going to get. They're evaluating the risk, the return. And that's usually the disconnect, which can cause sellers to dismiss offers too quickly. No, we're not taking that. I'm not even going to look at it any further. They need to fully understand what's actually being presented, and that's our job as brokers is to make sure they
Hmm.
understand that why the buyer's coming in with this type of range. Brandon, how often do you see sellers anchor to a number early, maybe before you've even listed them, and then when offers start coming in, they struggle to evaluate it objectively because they've got this anchor in their head?
Almost every time, regardless of how much we set expectations, they want a certain number. What I like to tell owners is we're asking X price or trying to get close to X price. But my goal is to get you the full value of the transaction, my favorite saying. Because very often, like you said, Chris, you're not going to get full cash up front. What can we do? Get a large component at close, maybe some seller finance, maybe an employment agreement, maybe some other factors that lead to that total number that makes sense for a buyer to accept the transferability of the risk of buying this company or offsetting any owner involvement, or as like to jokingly call it, the seller's sweat equity multiple they've applied to it that just isn't always financeable or just doesn't tangibly add value that they think that it does. So yes, it's almost every time, but I always stress to owners, look at the total consideration. Look at the total consideration. And for the third time, look at the total consideration. And very often, that's where not only do you save on upfront taxes, but you can save on some prolonged income coming in post-sale rather than one lump sum where you get taxed and it's done. You can add a little more value and also encourage buyer trust. We stress that time and time again, the transferability of the business. When a buyer is more comfortable, the better the offer will be. And by giving them some consideration there, looking at the meat and potatoes, besides just the asking price and the total walkaway, that's how you get to that component, Chris. That is where I stress that to owners. Some get it, some don't, some just, it doesn't matter. They want their number, and I understand. I get it. Sometimes they just want their price, and that's their prerogative. Power to you. But if you want to get deals done, you have to be a little more flexible, especially in these recent times with the SBA clawbacks, the financing contingencies, the numbers, the interest rates. You've got to be a little more flexible than 2 or 3 or 4 years ago when it was a much more wide open process, as you and I know, with the rates and the complexities of the SBA unraveled to allow us to do so many more different types of transitions out versus just straight exits immediately at close or very limited transition periods after.
Yeah, sometimes buyers are doing everything they can to get you the number that you need, and it's just not
That's
good
right.
enough. And if they're coming in with 10 or even 20% down, and the debt service isn't allowing them to do any more than they're offering, that's your prerogative not to take that offer. But what you've done is you've just shrunk your buyer pool down to
Correct.
next to nothing. You're waiting for the guy with a briefcase full of cash or a bank account full of cash to write you a check, and I don't get many of those. We don't see a lot of those. Once in a
They're
while,
very
we'll get
rare.
some strategics that they have a full bank
Or
account
maybe
they
a
can write
smaller
you.
main street, a
Yeah,
very small main
exactly.
street type deal, a couple $100,000 at most.
But if you have a business that's going to be wide open to SBA financing, and that's the largest pool of buyers you can get, and you're not willing to kind of look at deal structure and say, hey, I've got to make my business financeable for a buyer coming in with 10 or 15,
Mm-hmm.
20% down. If you're losing that, you've lost probably 90 to 95% of buyer pool, I would say.
You're absolutely probably spot on. We had a term sheet provided yesterday for a auto repair clinic, the business and the property. The property is worth more than the business. You get a 25-year AM, as you and I know, which is great for debt service, as you were just mentioning. Would the bank send 10% down from the borrower or the buyer? And guess what they wanted else, Chris? 10% down from the seller as a seller note. Why? It makes more sense. It leverages it out. It's still able to get the full asking price. The bank is still willing to loan on the full asking price. They believe it can underwrite the debt service. With the right buyer and background, absolutely. But what is the bank telling everybody? You want top dollar? We need a little more assurance that you're going to be there and you're going to help. That's good strategy. And as a seller, that's good for you. You're saving 10% on that final $1.7 million. Rather than paying capital gains on it at a very high rate, you can work that through and make more money on the interest payments. That's great. So, like we just mentioned, you've got to be a little give and take and open the buyer pool up that way. And if you do, you might be surprised how many more opportunities in quality deals So let's talk about deals. Let's talk about your offer. How to start really breaking it down, because we've kind of hit around the bush now with being open-minded, keeping good perspective, but what does it really mean to break down that LOI or offer in front of you? First off, everybody's going to ask, what's the price, right, Chris? What am I getting? I think that's kind of irrelevant to start with. I like to explain to everybody what we're getting, tell the price, but say, we'll get back to that later. Now that you at least know the numbers in your head, don't focus on that, though I know it's hard for sellers to do. Let's read through this offer and understand why it came here. Because once we understand how we got to this point, then we can look back and say, does this make sense? Is it lowballed? Is it good? Or is it a good starting point, but we need to modify some other parts of the offer? What does that mean? Looking at the deal structure, how much cash it close, is there seller financing, earnouts, the rollover equity, what about your role as an owner, right? Is your role defined in this, or is it says, hey, TBD if you want to stick around? Or I've had buyers produce two different offers too, like you, Chris. We'll just say, hey, here's one if you want to stick around for a little bit less up, a little more up front, or if you don't want to stick around, I'm giving you less up front when you walk.
That's right.
Yep. So where would you start when you get that offer? Let's talk about your strategy. Where do you start breaking down? How do you start analyzing the offer or LOI in front of the seller? How do you start that role?
Well, first I start with telling them one of the biggest mistakes is treating all offers as if they're equal. Just like you said, they get focused on that headline number, right? Mm-hmm. That's all they really see. It could be a 3-5 page LOI. They just saw one number, and that's really all they're at first.
Get that tunnel vision.
Yeah, it's tunnel vision, exactly. In reality, two offers that look same on paper, they can be completely different in terms of risk and probability of closing. Let me say that again.
Potatoes.
Probability of closing. A strong buyer with clean structure, certainty of funds, that can be way more valuable than a higher number that depends on financing, long diligence, aggressive earnout terms. Got one of those the other day. Man, talk about some earnout terms. We can go into that if you want.
That one.
The real question, like you said, is not what's the number. It's what's actually going to make it to the closing table. Brandon, when you're evaluating offers with a client, how much weight do you try to present to them to personally put on the certainty of closing? I know this is a loaded question because I already know your answer, but how much do you tell them, hey, closing's way more important than this top line number? I mean, that's almost everything, isn't it?
It is, and I stress to every seller, can this get done? That's the first thing I say. We've got something, but can we get it done? Let's look at the timelines to close, due diligence requirements, maybe exclusivity requirements, and what is you as a seller's personal timeline that we know you need to get. Maybe there's a health issue. Maybe there's other reasons why you got to get out. We have to weigh and reconcile all those parts. And I tell a seller, do I like where we are? Yes. Do I feel comfortable it can get done? And I give them kind of a professional guess is saying, hey, it's probably X% just can get done. But that's if we do everything right. That's not, well, let's throw a variable out or forget some financials or lose this documentation or don't respond to the bank on time. I mean, I could throw all the feathers out of my hat. You know exactly what's going to happen to it. It's going to be barren and never get anywhere. And that's where I want to take this and stress to a buyer. We talked a lot about sellers, but when I talk to my buyer clients, buyers putting an offer in, I'm like, you have got to make it well structured. You've got to give us guidelines, not because you want to feel tied down, because you're not the one that's tied down. It's the seller. They need to know there's a process to get to the end and what those dates look like. And if I get pushback from a buyer on any of that, any real strong pushback, I know right now that's probably not going to be a pretty good offer because guess what, Chris? They don't believe they can get it done those timelines in reasonable timelines. Now, I'm not saying we got to get it done in 30 days. No, absolutely not. But I am saying, hey, you're hoping to get it done in let's say 90 days, but Mr. Buyer, SBA, make it 120. Let's make these timelines make sense. Let's make sure we know what we're doing with these timelines because as there's guidance on the road and lines on the road, people will stay in their lane most of the time. And for buyers and sellers, that's so important to feel like they have a road and a map to travel on together. Not to mention when you start looping in third parties, accountants, lawyers, bankers, everybody follows the base timeline from that LOI or offer. So by defining that, then you can say, I have a high probability of this executing. When I see LOIs that are one page with just open-ended timelines and retrades written all over the document, that's nothing tangible to say, I know this is going to get done. I can't in good faith say, I know this has a good chance because there's nothing to guide us. You and I've seen ones where the due diligence period can extend in perpetuity with no cause, no action, just random request. That's not an actual offer that can be executed on. That's a dream for somebody to tie someone up, push it out, and hope that it's successful. And those are not deals you can feel confident about bringing to a client or even saying, I feel good about this. It doesn't mean the offer itself tangibly doesn't have good meat and potatoes as far as the price and what the owner gets, but can it get done like you said? That is such an important component everyone wants to overlook and rush to that top number and that tunnel vision. I sit there constantly and beat that up. Like you said, the best offer is the one most likely to close with the least amount of risk. It's not always the highest number, but it's the best number. And that might sound contradictory, but it's true. It's the best number for you because you're going to get paid. Yeah. The offer doesn't pay you isn't worth anything.
No, if you've got an offer, if you got two offers, you got one for $1 million and another's $800,000. Those are first offers that came in, and you have absolutely no faith in the $1 million offer. I would work that $800,000 up as high as you could, negotiate it out, try to get it up to $950. Give them something. They obviously came in a little bit. They want a little discount. Make them feel good.
Give them some value.
You can get back.
Give them something they can see as value.
You can get that back in earnouts or maybe some kind of performance, but the small
employment agreement.
Yeah. I would absolutely work that $800,000 deal as high as I could and then move forward if I'm 90% comfortable that they can actually get to the closing table versus let's say the $1 million never closed a deal, just trying for the first time, doesn't even have an SBA, pre-approval letter. That's all the things that you need to be looking for that say, hey, I'm hopeful, but I don't even know how to get this done and never done it before versus, let's say, the $800,000 deal. They've closed 20 deals in the past 5 years. They know how to get it done. You just got to work them up a little bit. That's where we as brokers can do our thing. We can negotiate that out. We can get it up probably a little bit higher. That's their first offer. Hopefully it wasn't their best and final. That's usually not the case.
It rarely is.
Yeah, exactly. And so you show them some value. You show them what they're about to miss out on. You tell them you have a second offer. All the things that we use as tools for leverage to get them to move off their first offer. But yeah, you got to go with the one that you're most comfortable closing, that can get to the closing table. Otherwise, you're just wasting time. You're wasting the next 3 or 4 months with a buyer who most likely will not get there.
Right, and that is the classic age-old story we hear. Someone approached me, they gave me an offer, never got too far, it fell apart.
Yeah.
Very often when they start telling us the full story, it's very easy to pinpoint where those flaws and cracks in the offer, or the LOI, or the strategy was.
Yeah.
So often I'm going to go down to the local bank and get a loan. Well, I can tell you right now, that's 60 days wasted. That's just not going to happen. Yeah. But we see that time and time again, and we stress that's not how to go about doing this. So if you want to sell fast, right, Chris, like every owner, they'd like to be out sooner rather than later, preferably very fast if possible. Like, yeah, let's go to market, get it done like a house, and be done in 30 days. Well, you know that's not going to happen. But if you want to speed the transaction up, the first thing I actually would tell you to do is pause. Don't react emotionally. Always take a day to absorb an offer. Never counter the first day. And why I say that? Too often owners get that tunnel vision, I'm going to say it again, on that price, and they sit back and just get wound up or upset. I always tell owners, take a day, go sleep on it. We've discussed it, and tomorrow we'll circle back. Think about the offer. Sleep on it. Talk to your spouse. Think about if you have family involved, what their roles. Just take a minute to absorb it. It's okay. No one's expecting you to give you an answer the next day. If they want the answer the next day, that's not a good buyer. They're trying to jam you up for a reason. So take a day and just absorb it. From there, then you can say, okay, am I overreacting? Where do I see flaws? If I love it, make sure you just take a day. Even if it's the perfect offer, take a day. Make sure you understand it, because the first number may make you so excited you want to sign it, but you don't look into all the contingencies and really think through your timelines to exit. I've had some owners where the offer came in so fast, ironically, they weren't sure they wanted to leave because they just made the commitment to sell thinking it would take a year, and it was there in 20 days, and they're like, oh my, it's like they just weren't prepared because they didn't have a plan to get out like we've talked about on previous episodes. So emotionally, take a minute, reset, and then discuss with us, and let's work through it like you said. I think the next step, obviously, Chris, I'll let you take this part, is seek clarification. Never sign an offer you do not fully understand, back to bottom, front, back, top, left, whatever directional cue I can give you. Seek clarification. Why?
Yeah, and especially if it's not full asking price, I always talk to my clients, take the time to ask how the buyer arrived at their valuation. Why are they discounting it? Why are they not offering full asking? These things take time. You're absolutely correct. You got to put days between the offer and even any kind of response to it, whether it's acceptance or counter, whatever the case may be. You've got to sleep on it. You've got to wake up the next morning and see how that feels. You're going to be thinking about it. It's going to be the first thing on your mind, right? But you got to ask what assumptions that buyer is making. What's in that LOI? It's not only that headline price. There's going to be some assumptions in there They've obviously put probably some line items in there. And then you have to ask what risks they're trying to account for. If they've discounted the offer, below asking price, why are they offering less? Are they just trying to come in lower? They think there's a discount to be had there? Or
Mm-hmm.
are there certain things they're trying to account for in their offer that you can address? Maybe you can come back to them.
Yes.
These things take days to go back and forth on, or they should, like you said. And what happens in that time is this information that you're getting from them is going to give you leverage. It's going to give me, as the broker, leverage. It's going to let me know how they're thinking about this deal, what they're concerned about, so we can address it now rather than later. I'd rather address it before any LOI is signed. Even if it's not something that can be addressed now, I want to know about it. This is going to allow us to respond strategically instead of emotionally. That's the biggest thing about waiting a couple days. You're being strategic now in your response rather than, I hate this offer, I love this offer, I'm ready to go, whichever the case may be. You don't want to seem too eager too, because here's what happens when you're too eager and you're too happy to accept the offer. A retrade later. They know you're invested. They know you love that first offer, and now
They hooked you in.
they might be feeling like, oh, crap, he accepted that in day one, day two after the offer was made. I thought he'd kind of come back and negotiate. So 30 days, 60 days is going to go by. Now they know they really got you. And they're going to say, oh, well, we found this one thing. We're going to discount it 10%, 20%, whatever the case may be. Yeah, don't seem too eager. You got to make them feel like, hey, we're going in this together. This is going to be a partnership. This is how slow this deal is going to go. It doesn't have to be slow, but it needs to have great timing to it.
I agree. And when you seek that clarification and clear up assumptions, what you're doing is getting good information to agree on what the value of the transaction to you is. And I stress this to buyers when they write their LOIs and offers. Give good details. Make stuff clear. The more you clarify now, and I beat this up earlier in the podcast, and I said it on George's podcast yesterday, make it dense. Give it some meat on the bones, because that allows the owner to fully understand what they're signing. You want to see an owner walk away from a great deal? Uncertainty what's going to happen towards the close. Well, they didn't define my role, or I really don't understand this rollover equity, or I don't know if I like this and I don't want to sign because I don't know what's going to happen. You're not always going to have every answer. Like, the employment agreement's not going to be done at the LOI phase. I've had that conversation too many times with sellers. I get that. But please, as a buyer, have an idea or write in what you generally expect their role to be and how you want them to help. Give that seller some indication what their responsibility, either time commitment wise or specialty role or pay, is going to be, or general idea, and tell them we got to still work it out, but give them something that they can tangibly calculate, understand, and use. So often I see that happen, and sellers are like, I love the offer, but I don't know what's going to happen, and I don't feel comfortable. I don't want to renegotiate down the road or be disappointed when we find out later they had no intention of ever giving me that. They just said they might think about it, and I signed the LOI, and I wasted 3 months. So buyers, put some stuff in there. Please. It's for your benefit too, because it's going to force the seller to abide by it down the road. And if they don't want to, now you have a retrade for good reason and for fairness, not being cruel or not being misleading. That's important to have for your protection too. It's for all parties, and I stress that. It's for all parties to have clarity, because then you can evaluate the entire package, both sides. And then, like you said, Chris, respond strategically. Accept, counter, reject, ask for clarification. I would much rather take an extra 3 or 4 days and get clarity on 3 or 4 small points than just sign and say, we'll figure it out later.
Yeah.
Some items you have to. Employment agreements, maybe some form of an earn-out structure might need to be reworked on, like your favorite topic, the working capital peg. But having guidance to get there before it runs out is so good. We've stressed that time and time again. Just don't ever reject without consideration. And please don't just chase a number if you're out there, both parties. Don't chase a number. If you chase a number, you're going to overlook how it got there, and it's going to fall apart in financing or fall apart at the APA, the asset purchase agreement or stock purchase agreement. You and I see that happen time and time again.
Yeah, too often. Too often.
No, you're right. So let's take a step further here. How bad reactions kill deals. You've kind of got a chance to slow down. We said, think about it. My biggest overreaction I see sellers is when a buyer puts too low an offer, they just immediately throw it out. Now, let me say this, Chris. When it's drastically lowballed, reject it. Don't entertain that nonsense. But if it's within 25%, you should give it a good thought. It doesn't mean it's going to work. But anything below 25% unjustified, typically I'm pretty hard on unless there's a very, very, very good reason why. But where's kind of your threshold? I know it's very objective and a broad brush we're painting here, but I feel like that's kind of my floor. If it's 75% below asking price, you better have a damn good reason why it came in. That offer is being asked to be presented, or explain your case, for lack of better words.
Yeah, it's there's you got to look at the situation. How long has the business been sitting on the market? Has the seller been open to reducing the asking price? Maybe this buyer's seen it on our websites or seen it on a website for a really long time, and he's just throwing out a wing and a prayer. But yeah, generally 20-25% below asking price, you just thank you, no thank you kind of offer, as long as your client's good with it. But back to your point though, when a seller reacts too aggressively or shuts down the conversation because, let's say, the offer came in at 10-15% below asking price, that's going to send a signal to the buyer that the process may be difficult. When the response to an offer comes with some friction, you got to understand buyers have options. And if they sense unnecessary resistance early, they sense like, hey, this may not be a good partnership to enter into, the way you reacted to their offer. More often than not, they're going to move on to the next deal. They're not going to stick around and try to make this one work. They're going to find a way to kind of back down off their offer. But yeah, I agree with, back to your point on anything below 25% off asking price. That's kind of my low ball area. And my advice to my client is, especially if we've got a great business, great listing, we've priced it accordingly, is, hey, let's just tell them no thank you. We're not even going to counter that. I had one yesterday. Received a $10 million offer. Sounds great. Yep. The headline number right at the top was great. Zero cash at closing. I don't know where these people are getting this information from, but yeah, they wanted $5.5 million on seller financing, $3.5 million on performance earnout, and then $1.5 million for the owner sticking around for consulting. I don't. Yeah, this is a serious buyer. This is a company. This is not just some lone wolf out there. This is
looking for sheep.
Yeah.
They're looking for sheep.
I guess. I don't know. Have you seen situations where a deal could have been salvaged if the initial response had been handled a little differently? Maybe your client, the seller, had just not been so aggressive or not so angry at the number that came in, and something could have been worked out.
Absolutely. I'm gonna steal one of your deals when they counter back above asking price one time. We're not gonna name names, but you can't pull stunts like that. We've gotten offers before, sometimes within 95% of asking price, which means we've priced it pretty spot on. And then have an owner say, well, I demand the full price or more now because we got one new contract worth $5,000 more in our revenue. Palm to face if you're listening on Spotify right now, because God bless, you have got exactly what you wanted and you're going to throw it down the drain. I'll give a horror story. We had an offer for a franchise restaurant in the region asking $1 million. We brought them $995,000 asking price. At close, it was going to be financed, but there's no problem. This clear debt service, industry buyers in the franchise restaurant space. You're talking, this lines up. And he said, well, I can't do it because I can't afford to pay your commission. And we're sitting there going, we brought you 95% of asking price on the first offer, and your first response is, I like it, but I just don't want to pay you. In response, not to give ourselves a pat in the back, but that's the kind of aggressive response that even we see from sellers that is ridiculous. You're getting a great offer, and not just reduction in commission. He wanted to cut it by 50%. Guess what he didn't do? He never sold it, and guess who lost about half their value within the next year and a half?
It can happen. It can happen.
Karma's a bad thing sometimes.
Nice word.
But back to my original point in the case study, I've had sellers like you have as well that counter above asking price just because. And I'm sitting there going, we all agree this is the value. You have a very good offer and you're countering above asking price. Do you know how silly that sounds? When there's only one offer and one interested party. Yeah. If there's 7, sure. Yeah, you've got something. You've got competition. When you have one person, you've been on the market for 6 to 7 months and no one else is wanting to put a close offer in, and you've got something extremely tangible, don't overreact and be stupid, and do not be greedy. And what that really tells you, Chris, in my opinion, you never actually wanted to sell. You're just being greedy. So, Chris, that's where we're at now. Now, because I guess the most contentious part of anyone's debate, which would be, what is the role of the broker in all of this? Because so many times I hear from buyers and sellers, well, the broker's job is to negotiate, get me what I want. It's like, yes, our job is to negotiate. Our job is also to be honest and tell you the reality of what the offer is, too. And so many times I hear one party, well, I want the best offer. I don't care why you can't get me this. Again, that's a goal to get the best deal, but but it's also get a deal, like we said, Chris, that can get done. Would you rather me as a seller, Mr. Seller, tell you to take the largest offer just because it's the biggest offer because I make the best commission and it never go through, or advise you on the other deal that makes more sense, that will get done, maybe a little less money, but you get what you wanted, which is a sale? I have that conversation more often than I think people would realize, especially buyers. They tend to get frustrated, but they don't realize how much it takes to get someone to sell their largest asset and unload it, which is maybe not a fair word, but let's be honest, Chris. When it comes time to sell, a seller is divesting and unloading of an asset. And sometimes it's emotionally hard to do. Sometimes fiscally it's hard to do. And sometimes just greed gets in the way. It is what it is. What would you say is the hardest part about our role, whether it's evaluation, market context, negotiation strategy? What is the most important role you think we play if you had to pick one item?
It's a hidden, you can't see it on paper. It's a layer of objectivity that exists when we're involved in the deal. It's that layer between the offer and the reaction in the context of what we're talking about today. So instead of the seller trying to interpret, that offer comes in and he's trying to interpret it in real time, it gives time for the broker to break it down with the seller, compare it to the market, identify the risks that the buyer's talking about, and then helps to structure a response that keeps the buyer engaged while protecting the seller's position. You don't want to give up that leverage ever in a deal. And by not reacting to that offer when it comes in, the seller, being the broker, can react. Nobody cares what he thinks.
Surprisingly, half the time we get that message.
It's that layer. It's that layer of, hey, we got the offer. We're going to obviously handle it very professionally. Now we're going to our client and we're speaking to them. It's not the buyer speaking to the seller when the offer comes in. It's not going to be a face-to-face, here's your offer, tell me what you think, and let me see your facial expression. You're not playing poker at the table right now. You don't have to have your poker face on. If you're angry at the offer, you can let the broker know. But the response is that buffer, and that alone can prevent a lot of deals from unraveling, especially unraveling early. I don't know how many deals, not to pat myself on the back, but I don't think many of my deals would have ever gotten to the closing table if me or another broker were not involved. If it were buyer and seller, I just don't know how that happens. And I hear a lot of these PE groups and buyers, reaching directly out to owners to buy their business. I just don't see how that happens with the deals I've been involved in and the things I've heard and the things I've had to filter from one side to the other. If that filter's not there, that buffer, that layer of objectivity, man, these deals are tough to do on their own, but without a buffer there, I'd say they're almost impossible.
Especially the lower middle market and the lower down the chain of value you go in businesses is where I see a lot of that as well, Chris. I don't see how they're getting done because I see some of these sellers just bash heads. The larger the deal, especially starting in 20, 30, 40, 50 million, it's a little bit different discussion. Cash flows are going to be normalized. They're going to be easy to book. Bookkeeping is fantastic. It's easier to decide on value. It's the lower you go down the totem pole, the harder it gets, especially for PE groups, because they come in, they have different philosophies, different strategies. And Main Street sellers and lower middle market sellers just don't really give a dang about it. They don't care what market is. They don't. They say, this is my asset. I'm going to live off the rest of it. When I sell it, I don't care. I'd probably say the biggest thing we do besides that, what you said, Chris, is we manage emotions and expectations. And I say emotions specifically. Gary Kalmoff is a wonderful broker. He is the master whisperer of getting emotions under control. So often, especially once you've gotten past the offer and you get to that final stages, the emotions of that understanding and taking control of your deal is so important. And if you lose control of that, it just spirals. More sellers will blow a deal on emotion than anything else. Because every change or every question or every criticism is a stab in the heart, it feels like, to some of them. And you just got to leave that out the side. It's negotiation. It's a table. You got to know it. This is where the deal stays on the table. When you leave the table, it's done. It's okay. Everyone's just trying to find the best deal and negotiate. And you're right. You said too, how do these PE groups get to these sellers, Being a buffer is so important sometimes. Making sure people take a day to respond. Making sure owners understand and re-clarify. I've had a lot of owners sit there and tell me, I understand the offer. And then a day later, I don't understand what we're signing. We just discussed it yesterday and you told me you understood. So I can't imagine for a poor buyer who's having to go over something 5 times for a seller to sit there and just say, I don't get it, and go, we went over it, you signed it, how do you not know? That's why it's so important to have the right people on your team, making sure that's taken care of correctly. And I'll add one thing too, that we do a great job of in filtering. making sure a seller does respond. I've had some sellers just drag their feet and not respond timely. And what it tells me is you don't care, or B, you don't want to do anything. And that's even worse. No response is the worst possible thing. You have to reject. If you're not going to like it, just reject it. But please don't not respond, because that tells everybody there's something really wrong going on here. And you've now wasted everyone's time and money. So how do you, we've talked about, let's say, the role of our role. There's more idiosyncrasies we can go into, but we'll save everybody the minutia, the nitty gritty, because you don't want to hear that today. Our value is pretty simple. We keep deals alive. We get them across the finish line. We make sure you understand and get you the best possible deal. So how do we turn all that into an offer and into fast closing? Well, we said it best. You align realistic expectations. You understand and analyze the offer appropriately. And the third most important part that we haven't touched on is we know market conditions. And when I say that, we understand the typical alignment and what's going to be presented before an offer is brought to the table, especially based on the size and industry. You and I, Chris, both know if a family office, a private equity group, or a strategic buyer, and the higher you go up the food chain, the more likely XYZ scenario is going to be presented in the LOI or the offer. Knowing how to present that, understand it, and what's considered, I hate to use the word, what's market rate, but having that base knowledge is so important in presenting and interpreting the offer, because you've seen it best. Look at the offer you got. You said it was $10 million for that company. But you start going through the earnout and the seller finance and all this, and it's like, to some people, that might look like $10 million, but to an experienced broker, that's a leveraged buyout with nothing to give. You're giving away a $10 million company for nothing guaranteed. And that's two very different outcomes.
Yeah, for sure. I'll tell you what the biggest part of turning an offer into a closing is. You go running every morning, right?
Well, I try to. I skipped today. You picked today to call me out.
Let's see. You look tired. You needed that energy this morning.
I did.
What's the hardest part about running?
Starting the run.
There you go.
Getting up and going.
Momentum. Once you've got the momentum, you've got to keep it going. You run 2 miles and you meant to run 4 and you stop at the halfway point. It's really hard to start again. Not saying you can't.
Yes, it is.
Not saying you can't. But that's the same thing with deal making.
Mm-hmm.
Once an offer is on the table, the goal needs to shift from, is this perfect? And, is everything lined up? From, can this close? What I'll
Where's
tell
the
you,
finish line?
Yeah. The fastest deals happen when both sides, when they're focused on alignment instead of trying to win every single point. Man, we've been involved in those deals.
Well said.
Jesus, those are terrible deals. Every single point that comes up, it's just
a contention.
Yeah, exactly.
Don't do that. Both sides listening, buyers and sellers, don't do that. You will cost all your goodwill and lose you a deal.
But back to momentum. Momentum becomes one of the most valuable assets. I just had something this morning. I literally, we got a great deal working. Started about a month ago. Buyers are doing their things. Sellers, we're doing our things, getting them what they need. It's stalled here for the past 7 days. I reached out to our attorney. Hey, have you heard anything? I reached out to him on Monday. And I'm going to be honest. I didn't hear back from our own attorney. I hadn't heard back. It's Thursday now. That's 3 days. I could hit him up again, but that's not really something brokers do, is pepper lawyers to get the deal, keep the deal moving.
You have to give patience.
That's right. So what did I do? I spoke to my client and said, hey, I'm going to get a little anxious here. We've gone 7, 8, 9, 10 days with we've given them everything they've wanted.
Silence.
How do we keep this momentum going? I sent a mass email out to everybody, buyer side attorneys, buyers included. My sellers are copied on it. Hey, you guys need anything from us? What do we need to do to keep this deal going? Very professional, very calm. Didn't lose leverage. Didn't say we're desperate to get this deal done.
Just
didn't
highlighting
say that
we've not had clear communication, right?
Yeah,
we need
exactly.
to know. Give me a pulse.
What are next steps? What are you guys waiting on? I've got to keep that momentum. If this drug on for another 2 weeks, people would forget what we're even working on. You've got to keep momentum going through a deal. You've got to, every day, you need to wake up and say, is there something we need to be working on today? And maybe some days there's not. Some days you're waiting on other third parties to do their things, and a couple days are going to go by during the middle of a deal. But that's the point, though, is you got to understand where you're at in the deal. Because especially if you're running a company, you're going to focus on running your company. You've got to go keep making that money. In fact, it's one of the most important times.
Important parts.
Yeah, it's one of the most important times to keep your company running. Because if you give that buyer a P&L from the last 30 days right before a deal and revenue fell off 50%, Whew, you talk about a retrade. You're going to see one. Promise you fast.
You're right. And also, when you see a lack of communication, typically there's a few things going on. One, there's a problem. No one wants to speak on it, and they're trying to avoid it. Two, work's not getting done, which is the scariest part, because that means, why is it not getting done? And for a lot of sellers, if you've got a very sophisticated strategic buyer, are they working other deals? Are they, because you and I've seen this too. I've had buyers show up, lock 3 other businesses under contract, not tell other brokers, other groups, and they're trying to find out which one gives them the best response at the right time. Then they walk the other 2. I caught one, you and another one of our officers were working on about 3 years ago? By doing my job as my president of the company, talking to all the different brokers and agents and areas, I said, wait a second, what was that name of that offer? Wait, he told you what story? And then I called you, and literally within a day we had it, because both those deals were dragging. And this buyer was trying to kind of, play a little game. And I get it. He wanted to find the best deal for him. We're never going to begrudge someone. But one was at the finish line and one was just kind of getting rolling. It's like, well, hang on a second.
Yeah.
This doesn't make sense. So, yes, that's a rare scenario, but you have to be aware of that. But if you're dealing with PE groups and family offices looking for specific industries and specific trades, you might want to ask them as a seller in your offer, do you have any other outstanding offers in my space, in my area? Because just make sure their capital is committed to your deal and not 5 deals and there's 10 LOIs. So when you're analyzing an offer, when we say take your time, make sure you look at the buyer's background and know where would this buyer also be doing other business. That might surprise you in how they get a deal done too. And reversely, we've mentioned this in the podcast as well. Okay, well, you've done this deal before. Show me what you've done previously and how it worked out. So I know your deal structure will work, that your deal structure makes sense, that you can actually execute on it, right, Chris? Because what's the favorite word of the day lately? Rollover equity. Technically, it's 2 words, but we'll get past that.
Might be hyphenated. I'm not
Okay.
sure.
If it's a rollover equity, have you ever cashed it out and paid someone on it yet? And if so, what was the return?
Yeah.
If you're dealing with a scenario like these are all things to sit back and think and take our advice on because we've seen it. And we can tell you, hey, here's XYZ. If you don't like it, here's how we should counter. The offer is more than a number, and structure determines real value. All we're ever going to ask you, if you listen to this podcast, both buyer and seller, is take your time, load up your questions, make things thorough, and you will be more successful to get across the finish line. And finally, take your emotions out of it at times. You have to draw a line where you get upset. And I always tell sellers, remember the first conversation we had when you came in our office and you're ready to sell. We talked about what that would look like, what the vision, the price, the hope would be. And Gary Kyle Workman is great at this. He always makes sure when that first offer comes in, he brings up that story first so that the seller remembers. Because sometimes we get distracted along the way. Things get tough, discussions, meetings. It's a lot of work. But remember what your main goal and primary goal is to get accomplished, right, Chris? That's it. Stay the course, keep momentum going, and execute. And if you do that, the whole point of getting an offer will be completed in the transaction closing and moving on with the next step in your journey for both buyers and sellers.
Yeah. At the end of the day, an offer is just a number. It's information to you as a seller. It's telling you.
Point.
Yeah, it's absolutely. Don't look at that number and get stuck on it. What it's telling you is how the buyer sees your business, where they're seeing risk, how confident are they in moving forward. I think if you can interpret that correctly and respond strategically, you're dramatically increasing your chances of closing quickly and especially with solid terms. That's so critical. You mentioned it earlier.
Yes.
You've got to have those solid terms in the LOI. The other thing I want to point out is you need to understand that buyer. When they give you that LOI, do they really respect that LOI, or are they sending them out like candy on Halloween?
Mm-hmm.
You need to understand that from the buyer, because a lot of buyers, I hear this, it's not worth the paper it's written on. And other buyers are treating it as if they're just written the purchase agreement. It's not binding, but you need that buyer that's really respectful of what they're putting on paper and what they're signing. At the end of the day, the goal isn't to chase the highest number. If that's your goal, good luck selling your business. Often it's just hard to recognize the right offer, and it's mostly hard to handle it the right way. The way you handle it and the way you react to it when the offer comes in, that's going to set the stage for how successful you are getting to the closing table.
You're not wrong. You cannot chase fool's gold, and you have to understand what you have and take the market data back sometimes. And sometimes it's a hard pill to swallow. But when you have a real offer, it's something tangible. You have to understand that and take it for what it's worth. And I'll tell people too, there's very often people do not ever get an offer on their company because they refuse to price it realistically. They refuse to provide proper information. That limits that capacity. So always keep that in mind and be prepared. And remember, it may take time to get there. If someone throws you an offer day one right away with nothing else, hang on a second. Let the process work itself through and you'll be successful. And trust in the people you brought to your table to help you and identify the right ones. And if you don't know how, we have a great podcast episode on that as well you can go check out on Spotify or YouTube to help you pick out the right advisors for your team. Shameless final plug. Sorry, Chris.
Love it.
I can't help myself. Well, on that note, I think we've wrapped it up pretty good. We gave you some pretty good insights, some strategy, some theory, and just things to put on your checklist if you start to get to this point in your career or life where you want to sell or buy. Be strategic, be smart, listen to the Steps to Soul podcast, and be prepared to execute your deal. I'm Brandon Bourgeois, my co-host Christopher Sater. We will see you next week with another episode. Stay tuned.